Good morning, ladies and gentlemen. Welcome to the show. First thing I want to talk about right now is Deutsche Bank. You ever been on an airplane on the runway and you're sitting there and they're cleaning the wings off with to de-ice the wings, and then they're doing something else, and then they're loading the cargo bays, and you're sitting there and you're waiting and you're waiting and you're waiting and you're waiting to take this flight, it seems like it's never going to go. Then all of a sudden they start taxiing the plane out to the runway. Well, Deutsche Bank, we were in that waiting game for the longest time, right? Now they're taxiing her out to the runway. She's getting ready to go. This is it. I think this is it. I'm seeing the price fall today. Let's take a look. Let's get the chart started. Here's Deutsche Bank. Right here. German bank. And I've never seen it this low before. It's at 6.44 euros. It's down 2.63% on the day alone. Now, this is getting very, very dangerous. And now I'm going to talk to you guys about what happens if we see Deutsche Bank fail. And I mean, it's getting down into fail territory now. And it's doing it fast. It's down 2.65% on the day alone. At a certain point, I've predicted before, a long time ago, I said 6 euros is the mark. She falls below 6 euros. She's going to really start to go. It's almost like the airplane is sitting on the end of the runway, and now they're throttling the engines. This is it. This is it, boys. And what's the ramifications? What's going to happen? What's it going to look like when Deutsche Bank goes down? Well, the initial reaction through the whole financial system is going to be very, very bad, to say the least. The ramifications later, after it starts to go down, after Deutsche Bank starts to go down, it's intertwined in the banking system with what's called derivatives. And it's a massive derivative holder. Trillions and trillions and trillions of dollars worth of derivatives Deutsche Bank holds. These derivatives are interconnected with the other banks in the banking system. And so, nobody out there, if anybody tells you that they can predict exactly what's going to happen when Deutsche Bank goes down, they're a liar. Because these derivatives are so entwined in the other banks that it's going to affect the rest of the banking system and the whole world, actually. And here's the thing, though, is I don't believe this is going to be a cataclysmic event to take down the entire world's financial system. No, I think what it's going to do is it's going to cause specified problems within the banking system that are going to show up after Deutsche Bank goes down. In other words, other banks are going to suddenly find themselves on the hook for these derivatives when Deutsche Bank goes down. And we don't exactly know where or who at this point in time or how big that's going to be. But the central banks have no choice. They're going to have to step into the rescue at a certain point in time. Also, at the same time, all the stock markets in the world are going to take a huge tumble if Deutsche Bank goes down. So we're going to have financial chaos within the system if Deutsche Bank goes down. Deutsche Bank is imminent to going down right now. This could change everything. Could change the entire complexion of the entire financial system when the central banks have to react. This could force all of the world's central banks to have to react to this situation, very similar to the way they had to react back in 2008 when we had Lehman Brothers go down. And this is a very similar situation. It could cause the financial system to basically start to melt down, where the banks have to step in, the central banks have to step in again, very similar to what they had to do in 2008. In other words, this could create a very similar type of a crisis to the 2008 crisis. And we all know how they reacted to the 2008 crisis. All the stimulus that came afterwards. And the stimulus of 2008 created what they called an economic recovery. It wasn't really a recovery. They just brought it up to the point where they could call it an economic recovery. But that direction that it was moving in was the same direction it needs to move to cause a hyperinflation. And in fact, an awful lot of economists out there thought that the quantitative easing would cause a hyperinflation. And in fact, it didn't. Because they didn't do enough of it to cause a hyperinflation. This situation is exponentially larger because of the German bank's derivatives book. And so they will have to do enough stimulus measures this time to bring the economy up out of the slump that Deutsche Bank would put it in, that they would push us over the edge and head us toward the hyperinflation that everybody has been watching for ages. Okay? So I'll tell you, we live in a world that's full of turmoil right now, and Deutsche Bank could again turn into a black swan. We've already just had one black swan, is this escalation in the trade war. And the full ramifications of that have not hit home yet. You know, the news is basically almost quit carrying the story. And they're not carrying the Deutsche Bank story at all. So now let's move on. We got other things to cover today. And I mean, I've already spent over 5 minutes talking about Deutsche Bank. But this is big, guys. This is really big. And Deutsche Bank looks to me like she's starting to roll over and go down. I made the mark at €6 and she's at 6.44 now. She was at 6.66 yesterday. She's dropping fast toward that mark. Okay, let's take a look at the silver price today. Now, what we've seen today is we've seen some weird little bounce in the silver price, but it's come right back down again now. It went all the way up to almost 1460, and now it's coming back down again. It's a little bit strange, you know, that bounce in price and coming back down again. I'm not exactly sure what caused it, but that's what we had. We had a bounce in price. Went all the way up to almost 1460. So we're at 1448 right now. Gold and silver, they're going to keep the suppression going as deep as they can into this crisis that's unfolding. The crisis is unfolding while we speak. We're going into a recession. And they're going to keep the gold and silver price suppressed as long as they can into this. But once they end the gold and silver suppression, then they're going to manipulate it to the upside just as hard and make just as much money as they were when they were manipulating it to the downside. Except they'll be pushing the price up. The same guys who have been manipulating it to the downside and keeping the price suppressed are the same players that'll be pushing it to the upside, making all kinds of money because they've stored silver and gold away from themselves already, real physical. Large supplies of it. And they're ready. They're ready to push it to the upside, but the time's not quite ready yet for them to do it. Let's take a look now at Bitcoin, the cryptocurrencies. 76.72. She's cooled off a little bit, but this is to be expected. It's getting ready for its next leg up, so it's basically going sideways, maybe with a slight downward slant to it, and it'll be doing this for the next little while before it gets ready to go into this next leg up. And that's the way I see it anyway. None of this is financial advice. Don't use it as such. And remember, cryptocurrency is a very volatile asset. In other words, you can get burnt. So don't spend more money on it than you can afford to lose. Cryptocurrency market capitalizations today, $238 billion. And it was up near 250, so it's cooled off a little bit. Bitcoin dominance of 57%. And we're seeing the coins moving downwards, but not substantially. We're seeing a little bit of a downward slope in price, but it's nothing substantial today. It's basically going along sideways until it gets ready for the next leg. Cryptocurrencies, I see them being the first mover. They're moving first over gold and silver. But you know what? It's like the old race. They had a race between a tortoise and a hare, you know? And the hare went firing out, you know, as fast as he could run. That's like cryptocurrency right now. And the old tortoise, he was just going along, you know. And that's the way like gold and silver. It's the old tortoise. But in the end, it was the tortoise that won the race because because the hare stopped for a rest, And while he was resting and sleeping, he thought he had a big lead over the tortoise. The tortoise was crawling on by him and heading toward the finish line. And that's the old thing with the tortoise and the hare, and that's the way with gold and silver and cryptocurrencies. So do not give up. They're trying to shake you out as hard as they can. They're trying to drop the price, make you scared of gold and silver right now, make you sell. That's what they're trying to do. They're trying to shake you out. And they're going to shake out as many people as they can and get them out of gold and silver. And then the price is going to explode. And it'll be the most sorry day you ever had if you sell your silver holdings in these low prices. That's when you take your loss. You might have bought in at $20, $30, Hang on, because the thing is, if you sell right now at these low prices, you've taken a loss. And then the price is going to explode later. Maybe a year from now or 2 years from now. And you're going to be sitting there and saying, oh my gosh, I could have had what? And it's going to be a sad day, So don't let that sad day happen to you. Hang on to your gold and silver just like you hang on to your Bitcoin. Now, let's take a look now at the Dow Jones Industrial Average. Let's see what time it is. 10:31, so it should have been going for 1 minute now. Let's take a look and see where we're at. 250 points down on the day. So it's down just a little bit today. I'm going to tell you what, guys. You think 250 points down's a bad day? You haven't seen nothing yet. If you see Deutsche Bank go down, you haven't seen nothing yet. You might see a drop of 2,000 points in one day if you see Deutsche Bank go under, And, of course, the world central banks will have to step in. In fact, it'll be panic. It'll be panic. The world central banks, all these academics know is meetings. And so there'll be big meetings for the world central bank. They love meetings. You ever notice the academics, they love to go to a meeting. It's always meetings, and more meetings. Honest to gosh. But during these meetings, they'll come up with something. And I already know what they're going to come up with. Money creation. Solves everything. There's only one problem. Too much money creation is just like you drinking too much mineral oil. People can drink mineral oil. You drink too much mineral oil or too much, what was that old oil they used to use? They used to have an oil they used to drink when they were constipated. You drink too much of it, and you're going to go the other way. You're going to go from the constipation into and that's what deflation and inflation is like. The medicine is going to bring on the inflation. See? So we go into a period. Deutsche Bank goes down. We'll go into a period of deflation. But it ain't going to last long. It might only count the hours how long it lasts. Okay, severe deflation. Deutsche Bank goes down. We get severe deflation. You can almost count how many hours it's going to last before these central banks go to a meeting and then react on it. And then we go in the opposite direction. We go into inflation. So don't count on a deflationary period. You've got all these dollars saved for yourself. Yeah, save a few dollars for the deflationary period. It might last a couple weeks. It might take them a couple weeks worth of meetings before they finally get around to stimulating the economy again. But don't fall for this deflation stuff where there's going to be massive deflation and I'll buy my gold and silver during the deflation. Don't fall for that. That Harry Dent kind of stuff, Don't fall for it. Where the dollar is the best place to be, don't fall for that. Because they're not going to leave it that way. The heavier and harder the deflation hits, the more stimulus they're going to come in with. It's the only direction they can go, and that stimulus is going to cause inflation, and it's going to cause assets like gold, silver, cryptocurrencies to shoot to the moon, and the dollar to go down the toilet. So it's the deflation, ultimately, that destroys the dollar, because it's a reaction to the deflation. It's kind of a complicated sort of a thing, But we're heading toward inflation, and actually, ultimately, in the end, we're heading toward hyperinflation. Now, let's take a look at crude oil. Crude oil prices are plunging today. $1.87, 3.04%. It's just that's a big drop today. I need to look into this, and I need to find out why crude oil prices are dropping so much today. That's a big drop. That's a big drop. $1.87 is a big drop. U.S. Treasuries today. I also need to check the Canadian dollar. If crude oil prices are dropping that fast, you know, it might have an effect on the Canadian dollar. Let's check here with the Treasury bonds, and we're seeing quite large moves in the Treasury. You know, there's a lot of movement in the markets today. This is a lot of movement today. I got over 4 basis points on the Treasury yields here. Man, these are big moves. 4.1 basis points on the U.S. 30-year. It's finally dropped below 2.8 or 2.77 now it's down to. If that U.S. 30-year has been the only holdout on the yield curve inversion, and if it keeps dropping, we could get a full-out yield curve all the way out. We've had it out to the 10-year. We could get it all the way out. We're all the way to the 10-year right now. We could get it all the way out to the 30-year if that 30-year keeps dropping. So this is very interesting. Now let's take a look at the U.S. dollar index. Sorry it was a little bit of a long show today, but here's the thing, guys. Deutsche Bank is starting to head toward imminent failure, and this is going to have a profound effect. This could actually start the entire crisis that has been brewing now for ages. And there's so many things within the system that right now to talk about. I haven't even touched on Brexit today. Anyway, listen, perhaps I'll do it in tomorrow's show. We'll catch you guys later. You guys have a great day, and the dollar's at 98.34 and a strong dollar today. Bye-bye, guys. Oh, and give me a thumbs up.